Markets tumble as the Fed just officially shifts gears into rate hike mode. At the meeting today, interest rates were held flat, but the updated rate forecast has turned hawkish. Half of the Fed is now forecasting at least one rate hike, while essentially the rest have just shifted to no cut. There's still one outlier though, but he's always an outlier. Of note, new Fed Chair Warsh chose to abstain from making any projections. So what does that mean? Well, the rate hike path has officially shifted for 2026. Incoming rate hikes are solidifying for investors. Markets are now pricing in a 90% chance of at least one rate hike this year. And the odds for a second hike are now over 50%. This led to the S&P tumbling today along with Treasury yields spiking. This has all been set in motion by the US-Iran war driving up oil prices, which are essentially the lifeblood of the global economy. Sure, a ceasefire deal is supposedly ready to be signed, but the damage is already done. Maybe it'll be just interim, but remember how that turned out for the Fed during COVID. So what now? Well, next up is the May PCE data next week on Thursday. It's the Fed's preferred inflation gauge. So it'll likely be the tiebreaker from the mixed CPI-PPI results last week. Stay tuned for more updates.